Good morning, everyone, and welcome to Morning Market Movers, where we do live analysis for day trading and take a look at hot spots in the markets for today, June 1st. I had to look at the calendar.
I know, right?
My mind is slipping. It is June 1st. My name is Todd Rich. I'm with Nadex. With me, Brian Caprice from Keep Trading Simple. For those of you who were wondering what happened to our afternoon session tomorrow, I do apologize. Brian had a family emergency. He's solved it. Everything is okay. But it was a last second thing, sort of took us out of our routine and our rhythm. It doesn't happen very often, but every once in a while we do have to cancel. We had to cancel that webinar. All right, for today, what are we looking at? Well, one, we are going to talk about what's happening in an hour and 15 minutes. We have some news this morning. So at 10 a.m. Eastern, we got the Bank of Canada going to give us their interest rate decision and their statement expecting a full 50 basis point increase. So they're going to be going from 1% to 1.5% is what is expected. If something happens that is not expected, we could see some movement in the Canadian dollar. We've also got in the U.S. we've got the ISM manufacturing, the purchasing managers index. So we're going to get a glimpse on some economic numbers along with the JOLTS, the job openings report. Remember, we've got the Fed who's got their dual mandate. One is price stability, which is the 2% on inflation, but they also have max employment. And so we do watch. I mean, if these job openings are going up, it can be causing some problems. And we know that they're trying to slow down the economy because it's running very, very hot. So that glimpse into those jobs numbers could be interesting. So at 10 a.m., we've got some great economic numbers that could move equities. Now, we do have oil. We got gold and silver moving this morning, popping. And I'm really kind of curious, why that happened. I'm not quite certain, but we're going to certainly take a look at technical levels in gold and silver. So some fun things to look at. All right, before I flip it over, Brian, we're going to look over, and Brian will go through, quickly through the headlines, and we'll jump into charts, mostly on metals and equities. I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. And here's just a little quick peek. You can see gold popping. So we do certainly want to take a look at some levels in there. Brian, I'm going to flip it over to you so we can keep cranking along this morning.
Yeah. So I would say the big headline for today, and again, for those of you, I see we just have another question on there, Matt. No, there was not a session yesterday, Matt. I had to attend to something. Just so you guys know, so you're transparent. If this happens, like I said, it's been one time in 5 years I've had to cancel, but just to kind of give everybody the preface from it, my mother is battling breast cancer now, and we just went through our first round of chemo, so 1 of 4 is down. So there may be times where I have to bounce out, and Todd will have to handle these sessions in the morning, just so you guys know. So family's always first for me. If I need to bounce, I'm going to have to bounce. So, but Todd is more than capable of handling that. But I apologize yesterday. That was really last minute. It was kind of like a scramble about 15 minutes beforehand. So there was no session. We thought we had it all worked out, and then obviously, you know how life is. Murphy's
Law.
He had to throw it in there at the last minute. We're like, ah! So, yeah, with juggling 2 little ones and the 2 big ones, I was like, all right, I had to cancel. I have nothing else. I was out of cards. So that sometimes it happens, but
and in the chat, I just said I meant yesterday's session.
Oh, yesterday, yeah. We didn't do it today. Yeah. But mom is feeling better, So again, just needed some fluids, but we had to run people to the hospital back and forth. But she's doing much, much better today. She said she felt instantly better once she got fluids back in her system. So with that said, 10 o'clock today is going to be the big time frame for us. We do have some things spiking right now, but 10 o'clock is really our first gauge into kind of what's happening next. And there's 2 things we need to look at. One, ISM, showing whether manufacturers are still looking for the expansion or the contraction. We have seen some numbers that have not been the best. Right now, the markets all are green, but we know a lot of times the market moves ahead of time to where we should be setting up trades. So I don't want to turn everything negative today and be like, hey, Uncle Warren, you should be shorting. But whatever you things kind of, you see things moving ahead of time, pre-market hours, there's nothing out there right now that really kind of is telling us to short. But we do have two things. One, ISM manufacturing is expected to go lower. I don't think we're going to get to that 50 number or below it. But if we come in a little bit lower at 52 or 53, that shows manufacturing has started to contract even faster. Some people could look at that because we know that the supply problems that, when I say supply problems, it's not that we don't have them. It's that big box stores have too much of stuff. So they're going to have to start discounting it, lowering their profits. It's like, yeah, people are not buying stuff like they were before. Again, all these signs that a recession could be potentially coming. So manufacturing PMI is one, and then services later in this week. And then next week we have CPI, and that's really where we can get a gauge of what's going to happen next. Now, the JOLTS job openings. I've never been a big follower of JOLTS, but this is something that the Fed is all over right now. Remember, there's 11.29 million, job openings right now, but there's only 5 million people looking for jobs. This is where they're saying that, hey, we need to destroy the demand. Companies got to stop hiring people. Typically, and again, this is what happens when you supercharge anything in life, it runs at a much, much higher rate, right? We've supercharged the economy so much that we've had such a major problem with inflation, but the companies are still, they're on the juice, right? They are juiced up, ready to go roiding out right now. So they're like, hey, we need more people, right? They were able to survive a pandemic time. So now that people are getting back at things, they're trying to kind of expand where they are. There's a lot of job openings, and even beyond what their capabilities are right now. And what I mean by that is, I mentioned, this one parent on the boys lacrosse team that he runs multiple restaurants. He's still down about 30 people for all his restaurants. He's like, I probably only need 10, but I'm taking 30 right now if I could get them. That's how many openings I have right now because I need a backfill just in case anything happens again.
Yeah.
You never know, So he's actually trying to hire over. So it's not that he actually has 30 job openings. He has 20, but he's going beyond. And again, that may be what other companies are looking at as well. Because again, if you can get 30 people in and say, you know what, these 10 aren't as good as they thought, let's just get rid of them later on down the road. Great.
Or you do flexible schedules because things happen.
Yeah. I mean, you can. Yeah. I mean, that's unfortunately, and I say unfortunately because there are people being hurt from this. Where we are now with kind of the teleworking and everything else like that, that's kind of where the future is. At this point, it's been proven that companies can survive in that format. Unfortunately, for large cities, that is really a big shock. And, again, it's hurting, mayors are like, you need to come back to work. There are businesses that have created and,
All those restaurants. Yeah.
Yeah. It just, there's a lot of people out there that's hurting. But the JOLTS opening, when the Fed's been talking about demand destruction, this is what they mean. It's the demand for new employees. This needs to come down by half. And they said there's two ways it's going to happen. One, we raise interest rates so far, the company is like, whoa, we need to save some money. What's the bare minimum that we need? Number two, we go into a recession where people stop buying things for retail sales. All of a sudden, companies will do the same thing. We've seen manufacturing pull back, but all of a sudden, when companies start yanking, job openings, that's really the sign that, okay, now it's having a big effect. Right now, companies are looking at this and saying 0.5, don't care. 1.0, don't care. 1.5, not a big deal.
Yeah.
This is
this
is so low.
When we get to 2% and beyond, beyond neutral, it'll begin to have an impact.
Yeah, so that's what we're looking to see. It was what the gauge of this is. For some reason, if this is higher than the 11.29, again, it's kind of basically just showing that the Fed is not moving fast enough. So that, again, it normally is not a big release, but it is going to be a big one today. And then we have Bullard speaking at 1 o'clock today. And again, he's talking about economic and monetary policy at the Economic Club. Again, it's kind of a general meeting for him, but again, he's been the most bullish. And even though he's not in one of the major two positions, he's been the guy that says, hey, we need to go faster, we need to go faster, we need to go faster. We did get kind of one mention last night down here. Again, it was 11 hours ago. So again, it doesn't even have a color on it because it's not market moving. But even at this point, Yellen admitted, hey, listen, I was wrong. It was the wrong path. And again, they're kind of crucified in the comments. A person's like, hey, if you admit that you made a major decision that affects 48 million people, you respectfully resign. If this was any other country in the world, probably. I don't think it's going to happen here. But again, unfortunately, I mean, the release is not even coded a color, which means it has zero market. Again, she's taken the position.
She's the Treasury Secretary, and she called it transitory, and they saw it going a different way. I kind of like the fact that you admit that you were wrong.
Yeah, and then totally. Absolutely. Props to her that, hey, listen, I was wrong. And it's great, but she wasn't the only one wrong. I mean, Powell was wrong.
Powell was wrong.
Yellen was wrong. And again, this goes back to it, guys. At the end of the day, it doesn't matter if you're right or you're wrong. The market is always right at the end of the day. And again, if you look at some of the big people that are involved with the market, they all said the same exact thing. We were saying on this channel, there's no way it's transitory. Sorry,
Yeah.
it's not going away. It's not suddenly going to go back down again, and it didn't. And it's just amazing that the people that are over here. And again, I don't know what they're looking at. I wish I
Yeah.
did.
And they had
I'd
different,
love to
and there was
support them.
other shocks to the system that contributed
Yeah.
into not helping. But
Yeah.
um,
Yep. But made it worse. But that again, that's what we're going to look at today, and that's what's going to be important. Bank of Canada is raising the 0.15. I'd be very cautious with that chart, though. Again, it's already moved at this point. It's already started to go back to the downside. Don't try to jump on the train right now and be like, oh, they're going to. Oh, they just did it. Okay, I'm going to short. I think that can be very, very dangerous. The European market, it started right here, so you can see that they've already moved it down again. One of the headlines is like it's pretty much guaranteed. Look, the second rate, it's seen as locked in. The market's already priced it in. So could there be a little bit of movement? Probably. This is one of those times though where be very, very cautious. When this news comes out right here, right? If all of a sudden it goes up, you're like, what the heck just happened? I shorted this thing because they raised the interest rates. It's already been priced in, so it's kind of set for a trap. Could it go a little bit lower? Sure, but this is one of those times when you're looking at it, it's already moved a lot. If you get into the short now, don't be surprised if it pops up again because everybody that's late to the party, that's already trying to get in when the market's already moved it down to price it in, that's where you get into the problems.
yeah.
And the reason why it's going down is because this is an official raise. I mean, it's going to raise. We don't find any data out as far as if our raises are working yet until next week with CPI. So we're just kind of in the dark. The United States is like, we don't know. We got a week to go. So people can talk, but we have no true gauges. And again, we don't have our May numbers yet. We get those next week. And again, right now, everybody is focused on month over month to see if the interest rate rises are doing anything whatsoever. Again, we'll see what the manufacturer believe if it's working or not. But again, be very, very cautious with dollar CAD.
And by the way,
Besides that,
before on the CAD, while you got it there, I just was going to go back. Where are we seeing? I mean, I just pulled up a daily chart on Nadex just to kind of go back. I mean, where might we see
125. Yeah, so
125?
this is where price is at right now. So obviously the big dark line down here, if you can't see it, this is the 125 mark. Large psychological number. It's on a quarter area. Right now, price is right in this kind of yellow area. It's a yellow area where we've seen a pullback. Could it go down? Sure. There's two small levels that kind of why I don't like it for a short. I mean, there's one here that it based a lot and then kind of popped out of. And there's another one. In the next hour, I think that it probably has the ability to kind of chip down a little bit before some dollar strength comes back in. But, the reality is the market has seen this forever. They've telegraphed this one. It's kind of baked in. If it continues to drop, though, I mean, I don't think it goes much lower than 125, nor is it justified that far. If it pops back up again, I mean, you can see that, again, if you're going to try to stop people out, on a 30-minute, if you take the last true trend, not the high to low, right? Because there was basing and kind of a new trend established right here. If you draw some fibs from here down, you can see that 23.6 is going to be a level for people to jump in. It also happens to be an area right here where we've seen sellers coming in. It's hit it a few times, but I would say that that's a level to watch out for. And again, maybe we look for the next bit of news, and that's 126.80. And all I did, guys, just so you know, is, in my opinion, in this area right here, there was a new trend established. We had higher highs, higher lows. So the most recent trend when we started here back on the 25th of May, that would be the most. That's the trend that we're in right now. Drawing it from high to low, 23.6 pullback. It is an area of supply. We've had it there before. It actually has already hit it before. But again, the last pump was, it pumped right into there and then boom, immediately dumped right back down. So a level to watch out for anything, if we do have a pop. And again, would I be surprised if the news comes out and it pops into that area and then slowly comes back down? Sure. It could be a parabolic move where it goes back up and everyone's like, wait a second, I just shorted this. Why is it going up? And then all it does is turn and roll back down again as a potential scenario for this one. So that's dollar CAD. I would say real quick, just, the VIX today, obviously, after the news kind of came out yesterday, there'll be probably a small pop until the news comes out at 10. If the news comes in as expected, I would probably consider this to deteriorate. As long as the ISM number is not, and JOLTS number are not way like crazy misses, the U.S. market should do okay today. I can tell you right now, yesterday, everybody was talking about, is this the bear rally? Is this the bear rally? And everyone's like, yup, it's the bear rally. And everybody was talking about it. So, for the most part, they're in the green right now, but are they major movers? Not really. The way to play these, and again, we said it yesterday, I said drop down to 15-minute charts and look to see what they're doing ahead of time. What kind of movement do they have? I'll show you real quick on all 4 of these. It's very fast. The open was right here at 9:30. As you can see, right before it pulled back, and there was a level of basing. This is what I mean by look for 15-minute pullbacks. It pulled back right before, and this one went down all the way to 1 to 2.5 in the first basically hour of trading. Did it make the 1 to 3 target? No, not really, really close, and sometimes that happens. But when you're at 2.5, are you going to risk 2.5 to make a 0.5? Not really. And again, with Nadex, you could have, again, depending on what the strikes were, I don't know now. I can't go back in time and look. There may have been an out of the money here on one of the shorter duration contracts that you took tiny risk on and were able to kind of make it up on it very, very fast. But that's what I'm talking about as a pullback. NQ had the same exact thing. There was basing that occurred at 7, 8 o'clock in the morning. What did it do at 8:45, 9 o'clock? It pulled right back up and then it based. You can see there's a 1 candle base, and at 9:30, it cranked all the way down and it went actually much farther. This one actually went all the way down to 1 to 4.75. So 1 to 3 is what we're looking for. It did it in the first candle. Opening candle in the level, boom, out. You're out in the first 15 minutes of trading. YM also had a trade, came right back up again. Just happened to be that this one hit at 9:15, a little bit close. And again, it did pull back, but did the same exact thing. Went to a level of basing on the 15-minute chart, and boom, pushed all the way through. And then that was the reversal for the morning. So had you gotten short, it just kind of slowed down on you. Didn't do much the rest of the day. Russell also had one, but it wasn't as clean yesterday. On Russell, as you can see, it popped up, but actually it's right here. It didn't actually hit the zone, so it didn't trigger it. It would have looked the same, and again, maybe with Nadex, again, because we just need the general range for some of our trade setups. 1 to 3 is right there. You can see that this one got blown. I mean, it blew all the way through. It came down to a 1 to 8. So it didn't trigger, but you may have gotten in as it came up and said, hey, listen, it's opening up here. It's high. If it pushes up, it may, if you would have set a limit order, it may have made sense. So right now, again, I would say 2 areas that I'm watching for in all these. Here's your Globex high. There's your Globex low. Right now, it's set up more for a trap, and again, it's already looking like it's trying to roll. I wouldn't say. I mean, I guess you could say right now that there is a level right up there. We could be hitting it. Could it go short? It's going to depend on the data. NQ looks very, very similar. Same thing. Globex high. There is your selling at top, and then again, there would be your trap kind of on the downside of this one. It looks almost identical. YM, same idea. This one is actually here. It's touched a few times, starting to roll as well. And again, they had that trap sitting right there. Oops. And kind of same point right here. So again, kind of bracketed in. And then Russell, basically the same thing. You have an area right here of basing. You have a confirmed touch, and we just went off of it right now. And again, this is kind of where we're looking for profit targets, and they got blown through. So I'd say there's probably a trap sitting right there as well. So, oops. But keep these areas marked. And like I said, it's always weird today when you have something as big as manufacturing ISM as well as JOLTS 30 minutes after the open. Kind of see where it moves. But watch out for those. I wouldn't be surprised. Again, this pound yen, you're already starting to see it roll. But I wouldn't be surprised if we have some yen movement based off of what we see here. So,
all right. Quickly, before we wrap up this morning, can we take a quick look over at gold and silver? We just wanted to see those charts. I mean, I don't know why it's moving. We couldn't quite figure out, but they are both popping.
Yeah.
And I don't know if there's technical levels that we want to be looking out for.
Yeah. So, we looked and we saw it. As far as technical levels go, we've had this level on here for a while. If you don't believe me, go back and look at the recordings. But that's the level we talked about, 1832. It was an area, and there was a punch, and here's a test right here. Here's your confirmation touch of that zone. This little red candle right here. Hopefully, you guys can see it with the resolution. It literally based, popped down, and then went off. That's kind of what it ran into. So it was a technical level for buying. What we do with it now, this is quite a big kind of push. And again, we saw nothing out there. There was no kind of fresh news out there. Taiwan, but that came in a little tiny bit after. That shouldn't really be affecting this too much. But with this type of burst, it's not news generated, but a lot of times what you'll do is you look at this and say, hey, listen, this is a parabolic move. We should be looking to sell it. You're right. A lot of times we should be. If you run it back through, we're actually touching the 50 right
50%,
now.
Right?
Yeah, it's kind of hitting an area right now. I don't love it. This zone formed at noon yesterday, so it's kind of a level. I mean, you could draw it here and say, hey, listen, this is a great time to reverse. If it kind of starts to hold and like stabilize right now, I would say yes, based off of a parabolic retracement type setup, there would be some type of reversal here. And I hate to say this, But I'm kind of curious at this point if this is why. There's not really with any news at 8 o'clock and 8:30 in the morning. Yeah, there's futures traders coming online, but I'm kind of more wondering, does somebody know what this data is? And is that why they're raising it higher in preparation for the news? Whenever you see a spike an hour before major news is
Um,
being released,
something
there
smells
are
fishy.
yeah,
Maybe
there are people that have access to the data that can, and again, this is where Todd and I, you and I have agreed to this 100% that there's absolutely no reason why or no justification for senators, politicians that they should be allowed to trade the markets.
at all.
Financial services people aren't allowed to do it,
It's
but
good
yet the
crime.
people on the inside that can see this, they are allowed to. They can get it and they don't get prosecuted, and they are allowed to trade it. Unfortunately, so.
So the question is, someone inside the government seeing these numbers and then trading something. We don't know. This is such
Who
a
knows?
strange move.
Who knows? But yeah, sometimes you see major movement before the news, and then you'll see the news. And what could cause this? These two numbers could get way out of whack. ISM could be down at 51. Jolts could actually be higher, back at 155. And they're like, listen, what you're doing is not working. We need to raise interest rates faster. Well, what would that do? Raising interest rates faster would crush gold down. So what is it doing now? It's sending it up, because if you want to short gold in preparation for the news, you sell it for a higher price first and then buy it back lower. You don't want to keep it low. You don't want to sell it down here and then go low, right? Everybody knows you buy low, sell high, and when you're shorting, you sell high and you
Who
buy
knows?
low. So
Yeah.
it's kind of set up like somebody knows something. It's moving ahead of time. And then what will happen is everybody will see that number like, oh my God, they're going to raise interest rates. And then this could turn and go right back down again. So that's how they tend to work out. Both of them, gold and silver, are just, they're both moving a lot right now. Oil not really doing anything, and natural gas kind of rallying just a little bit. And again, kind of that 8.30,
Right.
but it's still within the range. But gold and silver, they are both, they are off to the races right now,
They're off the
straight up in
races.
the
It's
air.
very strange. Yeah.
And again, it's 9 o'clock in the morning. We don't even have a U.S. market, and there's absolutely zero headlines, which means to me that
Something's afoot.
somebody knows something. Yeah, and it may not be insider trading. It may not be like an individual person. It may be the central bank starting to rotate funds across today. Because remember, the central bank and large banks, they also have, banks trade for themselves as well. They have internal accounts and they hedge themselves for foreign currency risk and things like that. So, it may not be a single person being devious. It may just be kind of the natural flow of things. And they may have some data that they say, hey, listen, this is what it's for. We've now the market is suddenly believing it's going to be this. Let's go. So a lot of stuff going
All right.
on.
Well, we will find out. We will find out. All right. With that, any questions for Nadex, please email us, customerservice@nadex.com. Brian and I are also accessible. If you'd like to email Brian, you can catch Brian at support@keeptradingsimple.com. My email address is todd.rich@nadex.com. I'm not going to recap everything, but what we are seeing this morning, we do have those economic numbers coming out in 51 minutes, 30 minutes after the open. So we could see some volatility in equities. We do have the Bank of Canada with their interest rate move 50 basis points. Looks like the Canadian dollar has already made a move in front of that announcement. And then lastly, we've got gold and silver just taken off, and we're not really quite certain why, but it is. So when you're looking for opportunities to trade, volatile hot spots in the markets, for some reason, gold and silver are lumped in there today. Brian and I will be back tomorrow morning. Again, apologize for canceling yesterday's afternoon session at last moment. But we will be back again tomorrow morning. Thank you so much for joining us. We really do appreciate it. Brian and I love doing this. And until we catch you next time, good luck in the markets, everyone.